That's better.
Yeah, there we go.
Only one at a time.
Yeah.
There, no problem.
Yeah, you get that feedback, don't you, when you do two things? Yeah, so did you get a chance to watch my short little video? It tells you a little bit about me.
I haven't yet. Let's
Okay,
see.
no worries. There's a little video. It tells you a little bit about my history and things like that. So, a journey, but no worries. You can watch that later. The purpose of this call is to find out, how we can help each other in this business. So, why don't you start out and tell us a little bit about your journey and how it can help you?
Yeah, I've been doing real estate since September, mostly as a PML and as a capital raiser. So I've done about a dozen PML deals and I've done three multifamily capital raises. They were
Fantastic.
sort
Yay.
of beginner-y.
Yeah.
Um, the first one was like 100,000, and then the next one was like 500,000, and then the next one was like 1 million.
All
So got
right.
it
Okay.
raised.
You're playing on my on my pictures away, so that's very good. Yeah, because I'm in multifamily too. So um
Mhm.
yeah, are you part of a program or network or
I joined the multifamily mindset program.
okay.
You
That's the
familiar
one
with
I
that one?
joined. Yeah, yeah. So we're in the
I
same
didn't
network. Isn't that
I
cool?
didn't love it. I don't love it, but it's
Okay.
okay.
Yeah.
So, what's your
Okay.
experience been with that?
Yeah, I've been through the 3-day workshop and now I'm working through the materials and things. So I've decided to make a switch to the large multifamily. So you've done some deals already, which is absolutely fabulous. My first journey was with small family, multifamilies. By that ranging up, the biggest one I had was 32 unit, ended up with over 100 doors. Made lots of mistakes, so kind of knocked me out of the game. Wrote a little book about it, in fact, cautionary tales about real estate. This was in 2000, from 2003 to 2008, 9. And so I was licking my wounds for quite some number of years. In 2017, got my real estate license again. Thought I'd try the retail. Seemed to be safer waters, but soon found I still had an investor heart. So I took a whole bunch of courses, not least Pace's Gator,
Mhm.
became an elite Gator, and because that's really what my heart was. I rediscovered it, and then a few weeks back, came across the multi-family mindset, went along on the workshop, and everything lit up for me in my mind like a Christmas tree. I could see all the mistakes that I made and what I should have done and what I could have done better than the first time round. And so I'm enthusiastic on that front, so I'm actually changing all my stuff and all my social media to reflect all that and looking at branding and getting on a plan to, build up my network. I've been building my network up anyway as a gator. So I'm just bringing that into sharp focus, looking at doing large multifamilies. So that's really
Okay.
where I'm at. But you have some hesitancy. What have you experienced so far then with that?
Oh, I mean, it's okay. The two of the three deals that I've done, I found outside of the multifamily network. I just
Okay.
haven't made very many useful connections in the network.
I see. Okay. So it's
So,
harder to get into the network, you're saying. Yeah.
well, not to get into the network, but everyone in the network are also, like on the Facebook group, are people who have been doing multifamily only for less than a year.
Okay.
Most people I know don't pay to stay in the network beyond 1 year because it's very expensive. So
Yeah.
they stay for a year and then they're gone.
Okay, that's a
Um,
valid point. Yeah, that's a shame because you would
so,
experience once leaving after a year.
right. So
Yeah.
everybody that I'm talking to is also trying to get started, but not sure what to do. And I'm like, oh, I'd really rather connect with people who have done a few deals and are experienced and just want me to help them, and I can like join a team. Um, and
Yeah,
I don't know,
that makes
those people
complete
don't
sense.
stay in the
Yeah.
network.
Yeah.
Also, in the network,
Yeah.
all of the coaches, I joined in January,
Okay.
Multifamily Mindset, and all of the coaches left in February and got replaced by new coaches. And
Oh, wow. Oh,
all of the coaches that joined in February were the students from the previous year.
oh, wow.
So the trend is that your coaches themselves have only been in multifamily for like maybe 1 or 2 years.
Hmm.
And then everyone in the Facebook group has been in multifamily for less than 1 year.
Okay.
And so it just feels like, I don't know.
Oh,
It's not a place where people have a lot of experience. And when I
yeah.
ask questions in the Facebook group, a lot of times they go unanswered
Hmm.
because there's no one around to answer questions because they're also beginners.
Right, right.
So
That makes complete
that's
sense, Gina, and thank you for the insight. That's very important. I'm glad to be part of Pace's overall community, as an elite
right.
racer.
And
Uh,
I am too. I'm in all of his
yeah.
Gator. I joined Gator also in January,
Mm,
and then I joined Sub 2 and Gator Elite in April, but I really haven't done much with it
mm.
um, yet.
Okay.
Actually, the meeting yesterday or 2 days ago was the first Gator Elite that I had logged on to.
Mm.
So,
I see. Okay. Okay. Well, yeah, I mean, there's opportunity. It's all about networking. And as you say, you clearly
mhm.
pointed out, which I'm grateful for, that that year, it kind of trips you up, because, yeah, it's on a year membership, but who wants to carry on beyond that? Because what's the value, especially
Well, and
my
if you
my
do carry
coach.
on,
Yeah,
you'll just
yeah.
have the opportunity to meet more first-year beginners who haven't done anything. There's
Right,
no
right,
value in that.
right.
So,
Yes, I see that. I clearly see that. My sponsor coach was Ellie Baxter. Do you know her?
mm-mm.
No, no, okay. But the person who taught the class was Eric Chatterton. He's been in it 4 years, but Ellie,
Right. A couple of the
uh,
teachers who actually go and do that.
yes, and Ellie was 2 years, but she's done a few deals, she said, so that's good.
Right.
But you've done what, three? You mentioned at the beginning there.
I mean, three, but I have like 2 to 5% ownership, so I don't have a lot of ownership in the deals because
Hmm.
I'm a
Okay.
small percentage.
So which hat did you wear as a GP? Were you an acquisitions manager then, or and you get paid in
No,
acquisition?
I'm capital raising and investor relations.
Oh, very good. So what are you doing to do the capital raise? Are you just tapping your network, or how are you doing that?
Right, I've been building a network and I've kind of taken a couple of the summertime I haven't really been working on it much, but I was just, yeah, building a network within all of my different real estate contacts mostly.
Hmm. Very good.
So
Yeah. So what's your goals there? Are you going to just
I
develop
think
a
that
team or?
eventually I will just settle in on being a capital raiser.
Hmm.
And I'm trying to decide if I will capital raise for individual projects like multifamily, or if I will start a fund in order to have the fund ready to invest in whatever projects I find.
Yeah. Pretty much
So,
what Pace is doing, right? He does that. Yeah, he does a fund every now and again. You can be part of Pace's sub two fund, yeah?
well, being a limited partner is not the same as being a manager of the fund.
Right,
But
right.
yes,
Yes, yes.
I don't think he's bringing it back. I think it was a one-time thing and it's done. Pace's fund.
Oh,
He
right,
said
okay.
he's finished with it.
Oh, really? Okay. Do you know why he said he's finished with that?
I think it was a one-time project.
Hmm. Okay. Because I know he talks a lot with Vina Jetty, doesn't he? And Vina's in this space quite heavily, with 200 units or more. So
I think that Pace will still keep his fund open for accredited investors with a minimum maybe of 100,000 or something.
yeah.
But his crowdfunding, low amount, low entry type fund, I think he's done with that
Yeah, I can understand that because I'd
because it
rather
was
do with
too.
accredited investors myself, when it comes because we're dealing with, large sums of money here, so kind of doesn't make sense all this crowdfunding thing to me, I'd rather concentrate on the higher ends. But I'm still learning, early in the game. Because the first time round, I didn't understand. Here's a ceiling. I came across the syndicates, but didn't know how they worked. Um, I didn't know how to break into that until I had the education. So that was very helpful. Now I want to concentrate on that, or at least explore it further if nothing else, right? See if how it fits. Yeah.
Yeah.
So how do you think I can help you? Because being in this space, certainly like to.
Well, when you have a fantastic project and you need capital raising, I'd love for you to share your pitch deck with me and maybe I can raise for it if it looks like a good one.
I like that
Um,
idea. Yes. Okay. Very good. So I like wearing the acquisitions hat, so that will be like a good fit where we could show you it and see what you think. It will be underwritten. I can have it even under contract, and we could do the capital raise. So how much do you think you? It sounds like you can do a really good job on capital raise. What sort of is your like ceiling at the moment?
well, it really depends on the project, is what I found, because when I raised for what I consider to be a very standard project
Mm.
that I feel like was a safe project with, I like the team doing it, I like all the numbers. It was we assumed a loan at like 3.5%. We never have to refinance. We don't have to do any renovations. And there was enough of a difference between our current rents and the current market rents. All we have to do is raise rent to get our. So I'm like, we don't even have to do construction. We already have a really low rate loan. I'm like, this is a very easy project. And the returns were around 15% internal rate of return.
Mm.
And it was not super easy to get people excited about that.
Right, right.
So I thought 15% return, internal rate of return without having any real risk, because it was a very safe play um, without a lot of work. So I'm like, this seems like a good deal. But that was the first one that I did, and it was hard to get. I talked to people about it for a long time, and people weren't very excited about it. And then I did a second deal in Massachusetts, which had more like a 20% internal rate of return. And that one is, we're in the middle of the project right now. It's going very well, but it's acquiring the properties, and we have about 18 months to stabilize or less, and refinance, and everybody gets their investment back when we refinance because the new value will be such a higher value. And then it's a long-term hold where the cash flows for so long.
Mm.
And people jumped all over that deal.
All right.
So the internal rate of return, actually, it might have been above 20. It was probably more between 20 and 30%, depending on how quickly we can refinance. And it's a portfolio, so it has 19 different buildings, and we don't have to refinance them all at the same time. So some of them are refinancing faster than others.
Nice.
And people loved the concept of getting their money back quickly, but
Yes.
then having a long-term hold with cash flow. And
Yeah.
then the third project was also similar, where the refinance happens within like a year to 18 months. And it's a hotel to workforce housing conversion. And the internal rate of return, again, is like above 30%.
Oh,
So
wow. Okay.
I know people jumped all over it because they're like, this is fantastic. This is such a huge potential. One
Mm.
of the reasons that the internal rate of return is so high is because they get all of their funds back so quickly
Right.
with the refinance. Um, and a lot of investors, I don't, it's just very easy to find people excited about it when the
Mm.
numbers are so good.
Yeah.
Like people are like, well, I would be dumb not to invest in this. This is
Right,
so great.
right.
How could I
Yes, that's
resist?
right. Yeah. Yeah.
Whereas most of the ones like that first one, when I present that one, they're like, yeah, it's kind of run of the mill, it's average. I've seen a dozen that with the same kind of numbers, there's nothing about it that's really special. It doesn't seem like it stands out.
Right.
And they say,
Yeah.
I'll think about it, I'll
Just
consider,
stop
but I
that.
don't know why
Get a
I
lot
would
of
choose this over
spammy
something else.
calls. Hang on.
There's other teams that have a little bit more experience who are doing more aggressive projects or new build projects with better returns. So why would I invest in this? So I feel like the amount that can be raised is directly related to
The deal, like
the
anything
deal.
else. Right.
Right.
Yeah. Absolutely.
One
Yeah.
thing that I learned after doing this a couple times is, after looking at the deal, to have a discussion and say, like, what would it look like for me as a capital raiser if I hit each benchmark, and let's talk about different amounts. Of course, I would go out and work hard to try to raise, but if it turns out that people are just not loving the deal and it's kind of not moving, then what
Mhm.
would it look like if I didn't hit the benchmark? And I would just want to have that discussion at the beginning. The one that I was having an easy time raising on and raised 1 million for, he initially, we talked about it and he asked me to raise 300,000 and I said sure. And we agreed upon a certain share in the project. So I did raise the 300,000 and then I said, what would it look like if I were to double that?
Mm.
And he kind of alluded that I could get some kind of bonus or additional compensation. So I did double it. And I said, what if I double it again? And
Mm.
so, because I still had people interested.
Yeah.
And then at the end of the day, he came back and he's like, I never said that we would change your deal. Like, we agreed on that first amount for 300,000 and it's never going to change. So I stopped raising for
Oh,
him. Like,
wow.
I didn't talk to anyone about the deal because I'm like, where's my motivation to do that? You
Right,
know?
right, right. Absolutely. Yeah.
So I think it's worthwhile to have a discussion about what if people love this deal or my people love this deal. You know, with a particular group of people that I work with, if they really like the deal and they want to get involved,
Mm.
um, what could it look like if I raised different amounts?
Yeah.
Because he already had a team, and I'm very barely involved with asset management on that one.
Mm.
But I'm still attending the meetings for asset management and on all of the teams. I don't know. It's a little tricky. So if I had a fund, it might be a little more straightforward of how
Mm.
I deal with these things. But
Right, right. Nothing's perfect, is it? They have the pros and cons with both.
right, and that's one thing that's been frustrating to me with the mentorship, because in the mentorship, when I say I want to be a capital raiser, teach me how to do it legally, and also teach me how to interact with KPs
Mm.
so that I can get compensated for what I'm doing.
Right.
And none of the coaches have any advice. They're like, I don't really know how to do that. I don't know what advice to give you.
Mm. That's
So
disappointing. Yes,
I'm
yes.
like, this is the mentorship that I paid for, and they don't really have any advice for me. And
Right.
so I'm like, it's kind of messy because this KP asked me to do something and I did it, and then he asked me to do more, but he wasn't going to compensate me. How can I negotiate that? And
Mm.
the mentors at Multifamily Mindset said, we don't know. We don't have any advice for how to deal with that.
So you can't really go out of your coaches, then you can't go directly to Tyler and ask him or something.
There's no way to contact Tyler, I don't think. I don't know. I just kind of have, for the past couple months, I've been running a small business that I do during the summer. So I
Mm,
kind of took a break.
mm,
And
yeah,
during June and July, I really haven't done very much with any of my real estate stuff other than um, investing. I've done a few PMLs, but the multifamily stuff, I've just kept those three that I have going. I'm attending my meetings on those
mm,
and just kind of watching how they progress, but I haven't worked on my network or worked on my social media or any of that stuff. I
right.
took a short summer break to kind of
Understand. Yeah.
decide what I'm going to do next
Yes. Yeah.
because I think I might need to create a fund instead of raising the way I've been raising, especially if there's no good way to do it. The other problem is that all of the people that I raised with, they have access to all of my investors. Like I brought my investor in and they
Mm,
invested through the KP's portal, and there's nothing technically to stop the KP from just starting a new project and reaching out to all my investors without even talking to me.
mm,
And those people
wow.
would just invest again instead of coming to me and say, could you raise again? And allowing me to ask my friends again. Does that
Okay.
make sense?
It does. Yeah. I remember
So
he was talking
the
about some software there which would guard people from stealing your investors, as it were. I don't know.
so that's another thing that I need to figure out.
Yeah.
Do I want to go that route or do I want to set up a fund? A fund does that too, because a fund puts me between the KP and my investors and he doesn't get to know them.
Okay.
So I'm
Right.
trying to figure out if that's the route I want to go or if, right, if the software is enough to protect them. So these are things that are next to figure out. And I haven't found a ton of information in the multifamily mindset to help me answer those questions yet, but I'll
Would you?
dive back in soon and
Yeah. Very
dig
good.
around and see what I can find.
Yeah, so let me ask you this. Do you think you've gained enough experience? In my mind, you have, but
Mhm.
enough experience in multifamily to actually be a sponsor?
No, because to be a sponsor, I also have to have enough funding, or
Mm,
I guess I would have to find a partner to be um, the funding component.
okay, so it's your
And for
network
me,
is
that's the
very
hardest part,
okay.
and that's I don't
Yeah.
have the connections. On the deals that I'm on, we all have a sponsor or a partner who is the money, who is the one signing on the loans or whatever.
Okay.
Um, in in the first case, the sponsor was able to sign on the loan himself. In the third case, he had a friend who was the one who signed on the loan, and I don't have that friend. And
Okay.
then the second thing is I haven't done all the other roles like the acquisition, and I haven't written out the asset management long term.
Okay.
Like I'm sitting in on these Zoom meetings, watching other people and having discussions about asset management, but
Mm,
I myself haven't been calling the shots and I haven't been through the cycle for more than a couple of months
right.
because all the projects
Yeah.
are ones that we closed on in like February, March, April. So I've only been watching asset management for a few months.
Okay.
So I definitely don't feel like I have um, enough experience to feel
Be a
like I have a
sponsor.
grip on all the different stages. To be
Right.
a sponsor, I kind of feel like you need to have experience in all the steps. And I
Mm,
haven't done those other things.
okay.
So
All right. Very good. Okay.
I'm, but I'm okay just defining myself in capital raising at the moment.
I like that, and as I say, I'm new to building my team, so I'd certainly want to include you if it did come across a project that you like. So
Yeah.
yeah, and we're actively working with my partner on this. He's a young guy; he's full of energy. So
What areas are you, what markets
I'm
you guys
in
are?
Knoxville, Tennessee, currently right now. So we're looking in the area. It's it's still a strong market. It's becoming more balanced between buyer and seller market. It's kind of cooled a little bit, but not as cooled as other areas of the country. So um, we're kind of in that cycle right now. We've seen the peak and we're coming off the peak. So we're looking to see what's available. We've seen good house appreciation and rents are very strong. Occupancy is very high. At one point, it was over 100%. There was shortage of housing. People couldn't get in. But it's dropped a little bit more to normal levels now in this market. So I'm going to be looking at that. But obviously, if the numbers make sense and there is clearly a way to excite potential investors, then it's going to make sense, isn't it?
Right.
Yeah.
So I'm kind of hoping to find more of those if somebody has a, you know, mind-boggling deal. It's very easy to raise for them.
Yes.
Because I
That's
have
wonderful.
plenty of people who want to invest but are just trying to figure out what projects to invest in.
Hmm. Well, I'm very glad to have met you. I've got another call coming up in a few minutes.
Yep.
So
Yeah, that
let's
sounds great.
finish your
Let's stay in
live.
touch.
Yes, absolutely, Gina. I certainly will, because it's nice to speak to you and that you know and got some experience there, especially with what you shared. I very much appreciate it. So I'm very grateful. Thank you.
Yeah, it was
Yeah.
nice to meet you. And I'll see you in those Gator Elite Zooms. I plan to
Yeah.
attend more regularly
Yes.
uh, soon. My mind is still kind of on summer vacation
Yeah.
mode.
You relax. Enjoy the summer while it's here. Winter will
Yeah,
soon be here.
I know.
Yeah.
Winter time will come.
Yeah. All
Okay,
right.
have a
Have a
great
great
day.
day. Thank you.